for 2013. So a strong flurry and a finish to 2013 for Persimmon. Now, that's a builder. But we've got to eat, and Sainsbury's are the boys that deliver our food. They are on the move. The UK grocer reported its best Christmas ever, beating market expectations, with sales gaining over the last quarter. Here with a little bit more analysis is our European business correspondent, Caroline Hyde. So, Caroline, Sainsbury and Justin King do it again.
For the 36th time, Manus, for 9 straight years, back-to-back quarterly gains in sales. Like-for-like sales up 0.2%. The market had been expecting a decline in like-for-like sales, so really bucking the trend, bucking the estimates as well. Some fascinating facts out there. 100,000 turkeys sold by Sainsbury's over Christmas. And it seems, Manus, the only way is Essex, because one store in Essex, that's, of course, just slightly to the east of London, £1 million taken in one store on one day. They call it the best ever Christmas. Taste the difference. Their sort of more upscale range, that did particularly well, as of course the convenience stores, the more smaller Sainsbury's local, they're called Sainsbury's Local. I know one's just opened by me. They've ramped up sales some 18% in their fiscal third quarter, and that's why Sainsbury's is expanding. They're opening 1 million square foot of new space over this fiscal full year. Remember, that's quite at odds with what Tesco's doing, reining back their actual scale on the high street. And this is all as we just seen a more polarised market. You've got Aldi, Lidl doing particularly well. Lidl saying it had its most successful year in history in the UK. So we're all going to the discounters. Well, half the UK population are shopping in the discounters, but also getting squeezed from the top. Waitrose, Marks and Spencer's are stealing some of our more upper-class buys. But nevertheless, Sainsbury's still managing to do well and stealing market share. Share now up to about 16% in the UK.
And Caroline, let's just talk about, you know, the landscape for the UK, because it's not that optimistic all around the UK now, is it?
You're right, because we get numbers out of Tesco tomorrow. Now, many were looking for a like-for-like decline. Will they buck the trend as well? Certainly Tesco actually seeing share price just climbing today on the back of Sainsbury's numbers. Bit of hope there, but most seeing that we'll see a 2%, if not more, decline in like-for-like sales over for Tesco over the Christmas period, as aggressive promotions just don't seem to be wooing us in to spend, and certainly that's going to be hitting profitability. But the consumer has been thought to be weak over the Christmas period. We know that food, beverages, tobacco spending, according to Visa Europe, was down over the likes of December. But is Sainsbury's the best of a bad bunch? That's what many are feeling, that Sainsbury's has managed to win out. Will Tesco, will Morrison's, will Asda actually see a slightly more depressing Christmas trading period? But also worth noting, Sainsbury's may be on the M&A view. UBS feeling that it's still one of its top picks in terms of mergers and acquisitions. Remember, Qatar Investment Fund is the biggest shareholder of Sainsbury's, owns 25%. Could they be back out on the hunt to take this one back private again? But certainly if you're a shareholder, you've done pretty well today. It's the best of the performers on the FTSE 100 this morning, as it really does beat estimates for its fiscal third quarter. Back to you.
Caroline, thanks for that. I'm never out of the convenience store, which is right down the street from me. OK, let's bring in Yannick Naud and see, has he been captivated from Sturgeon Capital? I mean, Sainsbury's, great set of numbers for Justin King. Are you convinced? They're obviously got it right.
Yeah, the execution is perfect. I mean, they have the execution perfectly for many years now. You have to keep in mind that Sainsbury is probably one of the supermarket expanding the most. I mean, they want to increase by 1 million square foot new space this year. Because of that, the gearing, the leverage is a bit higher. It's in fact double Tesco or Morrison.
You're not worried about that because rates are so low and their funding is cheap?
Yeah, as long as the funding is cheap, as long as they can keep growing, as long as they have a main shareholder, which is Qatar, which could support them in case there's a problem. I'm not really worried about both the financial leverage and the operational leverage.
Let's talk a little bit about some of your big calls, because we had this very conversation about energy, oil, energy exploration, and you've got two on your list. One is a Portuguese player. Talk me through your thinking on oil and gas and energy.
Well, I mean, the oil and gas, the big integrated E&P company in Europe, have been underperforming the market for many years from now. I mean, in the last 3 years, they've been underperforming the market. Why? Because they have kept increasing capex by a huge amount. Nevertheless, the cash flow are lower and the production is down. Now we start to see, I think from the third quarter, we start to see the fact that they're cutting capex. I think in the industry, the capex was down 18% in the third quarter, and therefore, because the gearing is quite low.
Okay.
And if they're able to increase cash flow by spending less on capex, we should see some better results, and better result for the equity investor, because of the low gearing, they're more likely to either do a bond new issue or give back money to the shareholders.
And you have a couple of names in mind.
Yeah. So in that play, I think there's one name to look at. It's Statoil. Statoil is a big Norwegian company. They have been cutting again.
Well, they had a dreadful run before Christmas, didn't they? They had a huge oil field where they said actually nowhere near as much as we thought we were going to deliver.
Yeah, I mean, I think it's a blessing in disguise. I mean, Johan Sverdrup, it was the biggest oil find since 1974. The production will start 1 year later. The field is not as big as expected. Having said that, at least in Norway, because they are such a big player, they are able to squeeze smaller minority.
Who are their two players? They've got two other partners in that oil field.
Yeah, they have Det Norsk. I mean, Det Norsk is and Lundin.
And Lundin, so they might be able to squeeze them out. Very quickly, Ireland goes to the bond market yesterday. You've got a view on Portuguese bonds.
Yes, I mean, Ireland, I've been positive on Ireland all last year. I think right now, I mean, at 3.25% for 10 years, you got to take profit. There might not be a lot of room left. I mean, the debt to GDP is still 124% of GDP. The cost of the debt is 4.9% of GDP. Therefore, I think Portugal could be a good candidate. Obviously, the rate is lower now compared to it was 1 week ago, but there's still some good news, and they might exit the bailout program as well this year.
Well, good. It's good to have an optimist in the studio. Yannick, well done on setting up Sturgeon Capital. I hope it goes well for you. Thanks for joining us, and I'm sure we'll see you throughout the year. Yannick Naud there, Portfolio Manager at Sturgeon Capital. Coming up, Alan Mullally said